Stock markets in Europe are trading sharply higher on the first trading day of September. The UK's FTSE 100 index is currently up around about 70 points, while the Euro Stoxx 50 index is higher by 35 points now. The DAX in Germany is currently up over 100 points, and the Dow Jones stock futures are currently up around about 97 points. The S&P 500 stock futures index is currently up around about 12 points. Now we have to remember that it is US Labor Day over in the States, so the cash equity markets are closed in observation for that particular holiday. Going into other asset classes, risk currencies are performing better, so the dollar is weaker while the euro is firmer. And in the bond space, in the risk on 10 that we are currently seeing, bonds and bunds and UK gilts are currently trading lower in favor for equities, and also we are seeing gold ticking off. It's currently down around about $3. Oil prices are also retreating off around about $1 for Brent and NYMEX crude. And the overall picture is one of risk on. Good morning, I'm Ishaq, Siddiqi, and welcome to your daily market bite. It is your first daily market bite for the month of September, a very important month for us as investors are now gearing up for the all-important potential Federal Reserve tapering of asset purchases. Now, we are a lot more calmer in Europe this morning, given that we had a pretty turbulent week last week, and it's interesting because we do have a wealth of economic data that should provide us some direction and information about the global economy this week. Now, the main driver behind the price stability that we are seeing in the market this morning is, of course, two notable events that we've seen over the weekend. One, which is the biggest driver, is, of course, the improvement in Chinese manufacturing activity. China's official PMI index rose into expansion territory, coming in around about 51. Now, the 50 mark is the signal. So above 50 is expansion, below 50 is contraction. So very positive to see that China's official PMI is now firmly in expansion mode. That is also the same case with the HSBC PMI manufacturing activity data for China, which indicates a similar, showing that China's manufacturing activity has regained momentum, putting at ease some of the worries that China's economy was slowing down. It was slowing down indeed, but now China is slowly starting to find its feet back up, and it is now in positive territory. So investors are welcoming this news. We are seeing mining shares in the UK and also across Europe, with the basic resource index outperforming all other sectors. And looking ahead, we've got a bunch of UK and Eurozone manufacturing PMI releases to look forward to. We are expecting a positive showing from both, consistent with the recovery that we're seeing in the UK economic conditions, and also the recovery that we are seeing in the Eurozone. So investors are quite optimistic that we are going to see a lot of signs that global growth is apace, and the global economy is on the right path of recovery. And now, of course, we are going to continue hearing headlines about the Federal Reserve tapering aspect of things, with more Fed members speaking this week. And also we do have to remember that we have the all-important payrolls number on Friday, which should give us some further insight as to how the US labor market is performing. The US labor market is absolutely key and essential for the Federal Reserve when it comes to tapering. We know that the only way that they actually are going to start tapering a large size of asset purchases is once the labor market starts showing a self-sustaining recovery. At the moment, it's questionable if it is, but it is heading into the right direction. We also have a number of events in Europe. You have to remember that we have a Bank of England policy meeting on Thursday and a European Central Bank policy meeting. And today we are also going to be watching some of the headlines out from the US in regards to the intervention in Syria. Now, it's been delayed for the moment, which has quelled some of the worries in the market, and that's because President Obama in the US is now looking for congressional support before the US take any action. That means that he's taken the proposal out to the US Congress. It's going to be debated and deliberated, and if Congress finds a reason to go to Syria, they will strike without the consultation or the endorsement of the UN Security Council and other nations such as France and the UK. In the UK, we know, have ruled out for now. Other than that, there is not much to say, so enjoy your trading day. I will see you guys tomorrow. Thanks for watching. Cheers.